trade today, and it was 171 pips, which is pretty lovely, to be honest. So we made about like 50 quid profit today. Well managed trade. I'm going to break it down, the move, what I was looking at, why I was kind of thinking more towards my trade idea. I had two lined up, and how it played out, etc., like what I was looking at. I used a lot of comparison between NASDAQ and the S&P today, and yeah, so gonna get into it. So the first thing that I was looking at was this doji candle that formed yesterday within this gap here, and I was thinking maybe, we might come down and take this previous daily low. That was my first target there, in terms of liquidity and where price would draw to. And I'm going to put the drawings on the chart just so you got a pretty brief. Ignore this text for now, but you can see I marked out that previous daily low, and this order block here from end of March, is coming into play. So that's almost a month ago that this is something that I've marked out, and it's now becoming useful. So in terms of news, I think there was job openings today at 3 p.m., which is 10 a.m. New York time. So that I did have that in mind, that there could be a surge of volatility in the market around that time. And then, yeah, so you can see on the 4-hour, like overall, it's a bit of a bullish model at the moment. And yeah, this order block here, I'm not sure what time frame it's on, but I had marked it out previously, so I know that it is there. And I mentioned it in yesterday's video where we tapped it here. So let's drop down into the 1 hour. Right, so looking at this here, first thing I did was I marked out these relative equal highs here as a buy side target, and that coincided with this order block from the end of March. And then on the 1 hour, you can see today, so from opening, price traded up and then came down. So immediately I'm thinking, right, this could be more of a bullish candle, just because the nature of bullish candles are they trade down before they expand upwards. Obviously we don't have the full picture yet, as it's only the lunch hour in New York at the moment. And yeah, I'm thinking of maybe doing these a bit later, but I just kind of like to get them out of the way once I've finished work, so the ideas are still fresh in my mind, what I'm looking at, what I traded, what I was thinking. And yeah, so the first thing we had here was previous daily low. It's not the first thing, it's maybe like the third thing I'm saying. So we got these equal highs, we got this order block, we've got previous daily low marked out, we've got this 1 hour inverse fair value gap that we tapped before the New York open. I think between 8:30 and 9:30 that sort of occurred. I also marked out this lower time frame fair value gap. As my initial thoughts were kind of, we've got this 1 hour inverse fair value gap. We've traded down into it. Price consolidated a bit before the session opened at 9:30. So I was thinking, maybe we could come down again, trade into this, and then come back up and continue down to take this low. Something like, where's it at? We need the line, the arrow, the path. There we go. So I was thinking that we'd maybe see something a bit like this, come back up, and then go take the lows like that. Yeah, that was one option. Or the other option was we come down into this inverse fair value gap, we see push up, fill the imbalances in here, hopefully get something form, retrace, and then boom, and then whatever needs to happen here. This was the higher time frame target there. So why did I go with the bullish one instead of the bearish one? Well, you have to look at what price is giving you, what price is showing you. And you know, I was very cautious with this. I was making sure that I wasn't getting in too early before I was happy, just to make sure I was correct, basically. So we drop down into the 5 minute. You know, we've displaced this, so I'm thinking, right, so because of this, we've got this fair value gap here. I'm thinking we can maybe trade back up into it and come back down, but I need to see how price is moving first. It was quite similar with the NASDAQ as well. Where are we at on the 5 minute here? So on the, what is it, 15 minute? Maybe it's the half an hour chart I was looking at. Yeah, so we traded down here into this imbalance. This tiny little imbalance in there on the 30-minute chart. And then on the hourly chart, you know, that's just another inverse fair value gap there. So from previous experience, I know that price can, you know, form a nice inverse, and then you can use that as an entry model to go bullish, depending on how it's moving at the time. And then, yeah, so in 1 minute, coming into the session, I was also looking at, you know, looking for SMTs, as on the 1 minute on S&P, we were a lot of consolidation here before the session started. You know, it's not massively clear whether we're going to continue down. Like you can see, this looks like it could possibly just continue downwards into this fair value gap down here. But because of this, you can see it's all very level here. Whereas on the NASDAQ, we've got SMT. So I'm just going to draw that out quickly just for my reference in the 1 minute. Yeah, so we got that. And that means that, you know, price has already swept this. So the S&P doesn't need to do that. And because this is the one that didn't sweep, this is looking more bullish, if that makes sense. And then, yeah, so coming into 9:30 open, I was looking at this and I was still a bit unsure, like even on the 3 minute chart. Where are we going here? Tuesday. Yeah, like even on the 3 minute chart, like right on the session, I was thinking, oh, maybe an entry here. And then we traded up into these two imbalances. And yeah, it was around here where I got in. It was quite early in the session. And then I was also looking at, right, if I am actually going to go long here, what are my targets going to be? We've got this high, this imbalance, this high, and also these ones marked out here. So there's plenty of buy side liquidity to be taken out by price. And yeah, so let's drop into the 1 minute, get into the actual details of the entry then. So I was looking at how price was, you know, moving up here. And I was thinking, is this a Judas swing due to the fact that we're filling in this imbalance here? And I had noted this order block. And as you can see, if you draw that across, actually, let's just draw that and stick that there. Drag that across. So put a nice template on that. Yeah, so I was looking at this order block, and as you can see, we hit it, and there was a lot of consolidation. Well, not consolidation, just accumulation right before the further move. And, you know, I think my initial stop was actually like down here, and I was just adjusting it to see what I could have got for something else, for like a full target, like later in the session after I'd already like managed the trade and I was out the trade. But yeah, so because of this movement here and the fact that this candle wicked down, that's a fair value gap there. Do you know what I mean? It doesn't need to come back into it, but that would have been the better entry because of the fact that is still an imbalance. but I know from experience that it doesn't have to trade back into this middle candle. Like if there's two fair value gaps, you don't need it to come back into the middle one. You can take the first one. But yeah, so I basically got in here just because I was liking how it was looking. Once I seen it consolidating, I was thinking, right, this is gonna then maybe push down and just continue to flop, or you know, we see this manipulate down before the move up, which is what we got, which is quite nice. And yeah, so as you can see, we come up here, price trades up to like around here. Got an order block there because that causes them candles to come up. You can see we get another retracement. I was staying vigilant on this, just making sure that, you know, I am focused whilst it's happening, because it could easily go back the other way. You never know. It's all about probability. But yeah, I'm not gonna lie. I was a tiny bit nervous, but you know, my risk management's in place, and I'm looking to take risk out of the trade pretty much when I can, when the market allows me to. Basically, I don't want to do it prematurely and then get stopped out, if that makes sense. So after we had this move up, I'm looking at the 5 minute, and this looks a bit more bullish. As soon as we cleared this candle, as soon as like this cleared, I was kind of pretty certain at that point, you know, we're going to continue up here and we're heading for this. But at the same time, you look at this candle here, 9:45, 9:50, 9:55, 10 o'clock. Yeah, I know there's news coming at 10 o'clock, so that could do anything. It could just reverse, or, you know, I didn't actually think at the time about it coming back down, just wicking into this this imbalance here and then just continuing up. So yeah, in terms of where was my TP, I aimed for this high and I had my break even here at the first high, just to be safe, you know, just to secure some profits, keep my risk down. For some reason, price wicked up here on a 1 minute, like super fast, and just straight back down again. So my take profit didn't get filled for like 58 quid. So we only missed out on like 7 quid there. But yeah, I was just kind of conscious the fact that we had, you know, this fair value gap here, that we could see a reaction off that. But yeah, as you can see, let me just check on my broker statement. Yeah, so I was in this trade for about 14 minutes, just under 14 minutes, which isn't too bad. But yeah, as the trade was evolving and we were pushing a bit further up, you know, I moved my stop to the bottom of the fair value gap, the inverse fair value gap. Then I moved it up to this wick here, and then eventually I was at just above break even, pretty much. So it was a well managed trade, and then yeah, just nicely done today. Very happy with it. It's Tuesday, can't complain. And then after the news release, price came up and took yeah, price came up, took this high, and then dumped back down. So after seeing that happen, I was happy that I got out here. I was like, right, fine, I'll take it, no complaints, happy with it. And then yeah, all it was the news release basically pushed it down, meaning price didn't have to come back down again, but it did. Tested the order block twice and held bullish, so you can see one test come up, and again inverse fair value gap created here, so that's also another potential for entry. But by that time, it's one of them. I'm already out the trade. I'm happy with what I got. Price does come up to the full target, bang on 11 o'clock. You see that? Hang on, is that actually bang on? Is that bang on 11? Yeah, literally bang on 11 o'clock. It hits those relative equal highs that I spoke about earlier. So that is a nice buy model there that I'm looking at. So I'm very pleased that did actually play out, because it meant that my my overall trade idea was correct. I didn't misread the markets. I just went for the lowest hanging fruit, took my trade out like here. It was around here I got out pretty much. Was it 525, I think. So yeah, it wicked up and then came back down to like this. So I just got out there. But yeah, it's one of those. I'm quite pleased about that today. I was also conscious of the fact that it's the 29th of April, almost at the very end of the month. And, you know, typically on a monthly candle, well, it's the same with any candle. Typically towards the end of the candle, you kind of get a bit of consolidation. Obviously, power 3, accumulation, manipulation, and distribution. So price is pretty much, you look at this month. Yeah, let's have a look at this. Drag this out a bit. So what we got? So first week, you know, we come down all the way down, create the wick for the month, expand up, quick retracement on the third week, and then this week, last week, sorry, we expanded up again, and then this week, I wouldn't be surprised if we just see, you know, a bit of sideways movement in the short term until the end of the month. So as you can see, we come down, second week, come down again, and then we expand up. So it's the same as like a daily profile, really. The charts are fractal, so what works on one time frame works on every other time frame, and you just have to, align the time frames. The higher time frame takes the bias, though. Price is more likely to move on a higher time frame because that's just how institutional banks trade. Like they'll trade on the monthly charts, because obviously that's the bulk of the volume, and they're the ones putting the most money in the market. But yeah, my point being is, yeah, we're pretty much consolidating here towards the end of the month. I wouldn't be surprised if it's another similar day tomorrow, depending on the news. Let's have a quick look. Oh, so there's quite a bit of news tomorrow, to be fair. So yeah, we'll just have to see how we go. But I'm happy not to take another trade until next month now, especially with the bank holiday, May bank holidays coming up. So yeah, it's one of those. I'm not sure what we're at for the month. I'll do like a full monthly review towards the end of the week, just when it makes more sense to, just in case you take more trades. But I know for a fact that we are now in the green quite nicely for the month. So I think if I look at my broker statement, yeah, so the amount of trades I've taken this month, 1, 2, 3, 4, 5 trades for the month, £65 profit, and yeah, it's not too bad, you know. We got 2 wins, 2 losses, 1 break even. So alright, your losses, they come, but your wins outweigh the losses if you're doing your risk management correctly. And obviously that break-even trade, it is what it is. It happens sometimes. You can't get them all right. It just meant it was managed right, and yeah. So with that being said, I don't really have too much more to talk about today. I think that's going to cover it. I guess we could have a little look at where price could possibly go tomorrow, like what my predictions would be. I was conscious of this imbalance down here, where the price has already been there. So if anything, that will be a future target, possibly in the longer term. But you never know. We could see that in the next few weeks, or what we're looking at in the daily. You know, we've still got this gap like around here. Let's take these drawings off again. So like, I mean, we have traded back into it, so we might actually not need to come back there. Next target, where's that going to be? Obviously, yesterday's high. That would be a good one. and this high here, which is, you know, around where I've marked out on the hourly order blocks. Yes, on the hourly chart. Oh, so like squished. That's an hourly order block there. You know what? I'm determined now. I'm determined. I'll get it. This bad boy here. So yeah, I think initially that's my next target. If I'm going for another trade, I'm anticipating we come up further, just because price looks a bit more bullish. But I'm rambling. I'm going over the same things. So with that in mind, I will see you tomorrow.